Good morning, it's Jeffrey Cohen. It's August 11. It's Thursday. It's been a really busy week in the markets, and we're going to talk about financial markets. We're going to talk about stocks, bonds, commodities. We're going to talk about the inflation reading. We're going to talk about all kinds of good stuff to help you in the stock market. We're also going to share kind of our view of the markets. We're going to share our dividend picks, which is pretty cool. We're going to talk a little bit about game theory. So we built a game, what we think is a well-structured game to talk about the market as it was entering into a potential recession. We're thinking that game changes now. Now that there's talk of us maybe exiting a recession in the next 3 to 6 months. So we're going to talk about it. We're going to talk about whatever you want, too. You can go ahead and ask me anything. Go ahead, AMA. AMA. I'll pop the chat out, and that way I can see if you write something. So go ahead, ask me anything. I appreciate that. And let's see. Let's get started. And by the way, due diligence. You can never do enough due diligence on the stocks that you hold. One of the things that Jim Cramer once taught me, and you can argue that he's a total knucklehead, but one of the things that he taught me was, for every stock that you hold, you have to do 1 hour of research a week. And you're probably thinking to yourself, well, that doesn't make much sense. I might hold 20 stocks, and I got a full-time job, and I'm busy, and I don't have time for all this. Well, then maybe you should hold 20 stocks. Maybe you should hold 3 stocks and do a lot of research and put the rest of your money in either actively managed funds, let someone else worry, or a whole team, or put it in passive indexes so that no one's worried because you're just buying the whole market, right? And every day you go out in the market, you go out in the real world. So spend time, right? And so we did that yesterday for Hallador Energy, and we found something that we really didn't like. I tweeted it out. Nobody cares, right? I got like 38 people. Twitter shows my tweets to 38 people, unless it's a special tweet that you all like and retweet and comment on, right? And so all 38 people got a benefit of our research, but truthfully, the benefit of the research is when we short more Hallador Energy, when we sell against the rising trend. And so, but you'll never know why unless you read the tweet, unless you do your own homework. And so I'm going to share with you a little inside baseball on Hallador Energy. You may not care. Let's be honest. You probably don't care, right? It's one stock out of 4,000 stocks that traded that passed our data validation yesterday. So the market is creating more and more and more stocks, and those 4,000 stocks exclude money-making stocks that are not in the U.S. So that's crazy that there's just more stocks too. More stocks of profitable companies, more stocks of unprofitable companies, global that are US listed. So we're going to talk about that too. There's a whole bunch of things to talk about. And so I have not looked at the futures yet this morning. I mean, Rome could be burning. So we'll get to that too. So we're going to start off with a couple of notes I wrote. So I did a lot of thought this morning. I was trying to figure out what I'm going to tell you people. What are you going to tell these people, Jeffrey? They get up early, right? They could be doing their own due diligence instead of watching a video. What are you going to tell them? First thing I'm going to tell them is we did a blog post on zero inflation. Holy cow. Just to put it in perspective, when you are in a period when inflation is running rampant, unless it is transitory, unless it is just energy prices, right? And maybe, but everyone told us inflation, right? It's terrible. So we made a whole video. Do you know I danced in the video twice? I got up out of my seat and I did a jig for you people. And I did that because zero inflation means that we were able to stop what is normally just a wave of despair. So many people tried to politicize it, that it wasn't good news. But to be honest, I'm a hard R Republican. I'm running for office. I'm I'm so not in favor of saying things about politicians if they're not true. And our federal politicians did a good job. Whatever they did, the federal government stopped spending money. The Federal Reserve Bank started quantitative tightening, took out about 100 billion and neutralized that money out of its assets. Um, it rose interest rates. They really talked it out, talked up the market, told everyone that Rome was burning. People changed their behavior. People really changed their behavior. And so all of that came together and we had a zero reading. And just to show you what that looks like, I want to say that that was BLS. But let's just look at CPI inflation. There it is. It's BLS. Bureau of Labor Statistics. Don't tell me you can't give me the Bureau of Labor Statistics reading. It's so stupid. Not even for like 1 minute, don't tell me that. Consumer Price Index, and then we could look at real earnings as well, but this is the big one. So what's the summary? It was unchanged in July. It was unchanged in CPI-U was unchanged in July. So you just go to Bureau of Labor Statistics, Consumer Price Index, and here's the chart. And I should probably have put this in the blog post because it's just crazy. All items, zero. But here's the tail of the tape. And nobody wants to even get involved with all this stuff, but it's just so important. In June, prices rose 1.3%. In July, they rose 0. In April, they rose 0.3. So it could be a cyclical thing. It could be a seasonal adjustment thing. But what that says that prices overall did not go up for a basket of goods that people buy who don't live on the farm. Food went up a lot. Food in the grocery store went up a lot. Energy and fuel oil went down. Electricity still went up. So all this talk about electric vehicles and electricity and Bitcoin and electricity, right? Electricity is really expensive. Electricity went up 15% this year. Utility, piped gas, natural gas is up 30% this year. So energy's up. It's just different kind of energy. It moved from like oil. Oil's cheaper, but now electricity costs more. So shelter's up 0.5% this month. Transportation is down. So that bus pass or that Uber driver a little bit cheaper. So there's a whole mix and match. And what that effectively says is the consumer price index went up 0, and that is just terrific, great news. So the market, however, did not buy the narrative. The market was not optimistic. And I show you this. This is probably the least sophisticated chart. But I love it because I love FinViz. FinViz does a great job in articulating some of these concepts so that guys like me can make something really complicated really simple for you. I like to say that. For you people. So let's do it. So the market was so the NASDAQ, right? And by the way, our model is starting to pick the NASDAQ stocks again. So our model likes NASDAQ. It likes Apple and Microsoft and Alphabet. And I don't know where the model is getting any of these ideas from. It likes semiconductors and it likes money managers. Oh my God. You might as well just take your money and put it in a cannon and fire it at the moon. It's unbelievable. Our model says risk on baby, but it's very, very particular about which stocks. There's not many stocks that it really likes, and so it's very particular because some stocks are holding their correlations to the market and most of them are not. We're going to talk about that too, but what I see here is the NASDAQ rose for 2 green candles. Jeff, what's a green candle? All right, so green candle is about 15 or 20 minutes of trading. So for 15 or 20 minutes when the market opened, it opened from 12,500 to 12,800. That was over a 2% rise, like that. So before you even finished your cornflakes and maybe picked up a newspaper or electronic newspaper and you thought about buying something in the market, the move already happened. I got to tell you, in our case, I thought about buying something in the first 1 minute, right? But if you didn't move fast, in fact, most of this was done pre-market. Move was done. And so, yeah, whatever, moved up and down 100 points. It was nothing. At the end of the day, it went up a little bit. You know what that kind of reminds me of? That kind of reminds me when last call for alcohol, right? You're at a bar. I don't know, for those of you over 21, you would understand, right? You're single. You'd really like to meet someone. In the first 10 minutes, 15 minutes you got to the bar, all the really attractive people that you might have been attracted to, they're gone. They all paired up. Or they were meeting friends or whatever. They left early. And through the rest of the evening, it was a good evening. Maybe you smoked some pot, maybe you drank, maybe you listened to the music, sat at the bar, you had some weirdo conversation for the first hour, and then maybe it got better. And at the very end of the night, everyone started to look a little more attractive. And so you didn't want to leave empty-handed. So you grabbed whatever you can grab. And you can see the last hour of trading, people grabbed at straws. And there were little tiny rises, and I noticed it. So we're long on Verizon right now. We bought some calls. Not a lot, very small position size. But we bought some calls, right? And so I'm thinking Verizon could go up. It's going to be great. And all day Verizon was up and down, up and down. And then finally at the end of the day, it went up like 0.2%. And that was it. That's what you went home with. You went home with a 0.2% rise in Verizon. So somebody probably feels great. They're like, zero inflation. I'm going to buy Verizon. I'm going to buy 1,000 shares. It didn't do anything. S&P 500, you didn't even take the time that we talked about. And I'm going to tell you why that is. I'm actually very concerned that the S&P 500, the ES_F future, or the SPY Spider ETF, which is the S&P 500 Index ETF, are the currency of just bad shit, right? They are the hammer that pounds the market. They're the leverage. They're the fulcrum. They're the teeter-totter, right? When you can lift a whole bunch of weight with a tiny leverage point, right? That's the S&P 500. It moves 500 stocks. This one, you didn't even have a chance, right? It opened from 41.20. It opened at 41.90. It only went up another 0.5% the whole day, right? And so if you missed it, if you blinked, if you didn't buy it pre-market or you didn't buy it at the open, you were done. You made no money. But again, up and down, up and oh, look at that. It came up a little bit. So people got the news. Zero inflation. They probably saw President Biden's tweet that said, I am God's gift to the U.S. economy, and I've completely fixed your problems by reducing your at-home internet service by $30 a month, by telling those mean old oil companies that they better lower their prices, and by passing a really, really large spending bill. I am helping you. So my guess is that's when the market fell, and then it went up when people just realized, holy cow, inflation went up by zero. So, and then a flat, and then the end of the night, you can see little bear goggles come on. I better buy something. I got to get something, right? Because what if the market's actually going to go up again? What if tomorrow the market goes up again? There are money managers like us. So we don't manage people's money. We're a non-discretionary investment advisor. So what that means, and I am Chicago Quantum right now, right? We had to lay off our staff. I'm so sorry. Sucks. I don't like it. But we are Chicago Quantum, and so we do this analysis and this research, and we run these models. And as a result, people can pay us, and we'll give them the stocks they should be watching. I don't know if you've been peeking. Don't peek. There it is. So, we're not managing money, but there's people who run money every day, all day. And those investors are expecting when the market goes up 2%, that their investment portfolio went up 2%. Now, here's the thing. If they blinked, they didn't go up 2% yesterday. I think this is the point that a lot of people are missing. The money managers, the discretionary investment advisors, the book runners, all those guys, they missed a 2% run. And so they had to catch up. And so they probably caught up here with enormously leveraged bets in the last hour of trading. We're going to take a look at what happens, though, when you go into today. Because yesterday we also did a lot of work on all the stocks that we thought were the best candidates for shorting. There's a lot of stocks that people could be shorting right now. Let me just give you one example. And I'm sorry if you own the stock. This is just one that we're following, and I would love to short. Ticker is IT. It's Gartner. And I'm going to have to explain a little bit about why. I've never worked for Gartner. I worked with Gartner about 30 years ago. It was a much different place back then. It is like an Accenture now. It's a big company. But back then it was tiny. There were like 4 people that I worked with, and it was great. I like the honesty of the Gartner people back in the day. Let's take a look. So I did not look at the chart. But when you looked at the chart, it had fallen like everyone else through mid-June. And then it hit a low of 220 and it's up to 300. Holy crap, we started watching it right here at about 285. I want to short this thing so bad. I really do. I really do. But from 285, it's gone up to 300, so I'm glad I didn't. But let's see if I can find... Here it is. It's got $5 on the balance sheet in cash for every share, but it trades at 300. Institutions own 95%. This is a very popular stock. Insiders own another 3%. Stock's not going anywhere. It's a profitable company. Gross margins of 70%. Profit margin of almost 15%. This thing's a beast. It's expensive, though. Price to sales is 5. Price to cash is 65. Where's price to book? It's not even showing. Price to book is almost infinity in this thing. There's no value. Gartner has no value. Gartner's value is in the people and the clients. There's no value. There's nothing there. When you buy Gartner, you're buying a promise that those consultants and advisors are going to make a profit next quarter. So of course I want to dump this thing, because if business to business sales drops, if we are truly in a recession and the recession gets worse, if Rome is burning, Gartner will fall. Gartner being Caesar at this point, right? If Rome is burning, Caesar will fall. Gartner will fall. It already fell to 220 from 300. That's great. But I found it because our model has all this data, and I was looking at something about, really expensive valuations, and Gartner fell into that list. So there you have it. But it's not falling. And look at that, it gapped up. So if you're a money manager, you might be buying Gartner right now. You might be like, wow, this is the best thing since sliced bread. Here's a stock that could go up 2.25%. It goes up $6. It feels great. You know, all my friends bought it at 220, and here I am buying it at 300, hoping for a little last push. So that's, by the way, that's an awful way to invest money, and I can't believe I'm telling you that money managers might do this, but they might do this. Let's look at the futures. Futures are up. So all those people who missed the rally yesterday, they want in. They've already started buying. It's 8 in the morning, and they've already bought their shares. The VIX is down, so this is the funniest part. So you gotta bear with me. I'm gonna add this to the little commentary here. And I'm gonna go through the rest of the commentary, but I'm sorry, you gotta see this. So the VIX is down. Stocks are up. Bonds are up, which means long-term and short-term U.S. Treasury risk-free rates are down. The U.S. dollar's down. I know that. It's down hard. Copper's up from 350 to 370. That's a pretty nice rise. Silver's up. I know it says silver's down 18 cents, but silver went up a lot. Silver's trading up. Gold's trading up. Part of that is the dollar falling on gold, but part of the thing with silver is the economy's looking up. Crude's up. So you got energy up. And you've got economic metals are up. That'd be a great name of a band. Economic metal. Maybe just if you start the band, give me a shout out. Maybe subscribe to my video channel here. So markets looks like it's going to go up. That's crazy. On what? On fear of missing out. On fear of all your friends and neighbors made money and you didn't. So now you feel like you better get back into it. All right, so let's go back. So the second thing I noticed is markets are not up. I saw somebody say that the NASDAQ is in a bull. That is such... The Wall Street Journal. NASDAQ Composite is back in a bull market. So let me tell you what I see. Well, I'm just going to tell you what I see. All three indices that we follow, the Spider, the NASDAQ, the NASDAQ, which is the QQQ, and the Russell 2000, they're all down on the year. That's not helpful. That sucks, actually. So your indices are all down. Now, they're up since mid-June, but I don't think that's saying much. The other thing is that our model is very optimistic these days. Now, it's a quant model, and you can argue that I must have been optimistic when I coded it, that somehow it reflects a bias of the builder. But I gotta tell you, I wasn't feeling very bullish when I ran it last night. Not at all. Look at those expected returns on stocks. I just want you to look at it for a minute. Those are some really high expected returns. Silvergate, Nvidia, Mercado Libre, e-commerce company with a lot of growth. Lattice Semiconductor, another semi. Synaptics, tech. Blackstone, Carlyle are both money managers and like private equity, and they gotta make money out of nothing with brains. Advanced Micro Devices, it's tech. Ares Management's a money manager. Intuit Software. I never figured out what Trimble or Amphenol or Ansys do. I think Ansys is software. These guys have no idea. But then all of a sudden, at the top of the list, you got Apple, you got Ameriprise, you got Microsoft. KLA is another tech, another semiconductor, BlackRock, T. Rowe Price. And then look at that, Coinbase is back. Alphabet. Lam Research is semiconductor. KKR, Broadcom is semiconductor. So you got semiconductors, you got money managers, you got large tech. With a little Bitcoin and a little e-commerce thrown in for seasoning. That's what the model likes. You should be crapping your pants right now. When the model's picking that, it means the money managers see the same thing that I see, and they're going to start driving things up. And two of those stocks, dividend stocks, pay a higher dividend than the S&P 500 and score better than the S&P 500, the spider in our model. The next thing I want to point out is variances, right? And so one of the reasons why we explained in May that the market was going to fall was that variances were rising. And so when variance rise, when the markets are like a roller coaster and we're all very nervous, we bid down the price of stocks. Makes all the sense in the world, right? If you can't sleep at night, buy a better bed. So the S&P 500 variance for the year, adjusted closing price for the year, just straight variance, is 1.7 times 10 to the negative 4. Our CQ&S uprun, which is 2,165 stocks that have nothing in common except that they're U.S. domiciled, U.S. headquartered, U.S. listed, that pass their data validation, with no market cap limit, and they only trade 1,000 shares a day or more for the past year, and they trade it every day. That's 1.8 times 10 to the negative 4. Those variances are not supposed to touch. That's why the S&P 500 was the best investment. Was you could beat the stock market in risk return. Not today. Today the S&P 500 matches the return. The other thing I noticed is that the down run has 1,658 stocks. So we're going to talk about this. And it's 5.2 times 10 to the negative 4. I want to say that number got to like 5.7 or 5.8. That number's way down. Variance is way down on risky stocks. And the other thing I want to point out is, do you remember, I don't know, a year and a half ago, we published an article that said there's 3,100 stocks. There's 3,100 stocks, and we analyze them every day. And this is why quantum computing is awesome, and why we're awesome, and why you should jump in here. Well, you add those two numbers up, and that's 3,820 stocks. That's 20% more stocks. So the indices are up, which is the price of the largest stocks, but there's 20% more stocks. There's more stocks. There's more stocks that are listed in the U.S. And I know a lot of them are foreign. I know a lot of them are Chinese, but they're not in the up run because we pull them out every day. The down run, maybe the down run. So money losers listed in the U.S. could be domiciled somewhere else. But this is a big number. There's a lot of stocks out there. There's a lot of stonks and stocks. But the variance is lowering. And so when the variance lowers, the expected return lowers. So that's interesting. Now, let's go to the next thing we found. We've lowered the expected return in our model to 8%. With dividends paying 1.3, that's a 6.7% return on stocks in the next year. And that's probably conservative. It probably needs to go back up to 10%. We have a 2.5% risk-free rate of return, which interest rates stopped going up. So we stopped jacking up the rate of return, risk-free rate of return. There's still 11 stocks that are better than the zero-sum game of all stocks. And big tech stocks are back in favor. It's pretty optimistic. The down run, there's new players. It's the same old song. And we're seeing some of the meme stocks, the old meme stocks, come back. A lot of biotech, meme stocks. These are names you know. If you're in FinTwit, if you're kind of in the know, there's a lot of weird stuff out there. So, and I do think that the spider, I do think people are playing around with it. So, Hallador Energy. This is interesting. So, we are short Hallador Energy. We are not optimistic. We actually don't mind the coal mining, thermal coal mining business. It's fine. People got to stay warm. People got to generate electricity. It's fine. But I don't know if you know, but there's another chart I should probably show you here. But I don't know if you know, but coal mining is a pretty dangerous business. Maybe you didn't know that. I know that. I just want to make sure you know that. Coal mining is a dangerous business. And so we found the mine safety disclosures for Hallador Energy for the first quarter of 2022. First quarter. And the way you look at it is a Section 104A is a significant and substantial citation. Significant and substantial means it's a mining safety, it's alleged violation. Mining safety or health standard or regulation where there exists a reasonable likelihood that the hazard outlined will result in an injury or illness of a serious nature. Okay, so I would think it's bad to have those. The good news is we're pretty bullish on Hallador. They have 13 of those across 2 mines. They're getting fines. Now, what's funny is normally the MSHA assessments, right? They're pretty kind. They'd rather the company spend the money on fixing it, not on paying, right? So which mines? 2418 is Oakton Fuels number 2. 2394 is Oaktown. Oaktown Fuels number 1. And unfortunately, Oaktown Fuel number 1 had a fatality. Now, this is a company that only has like 800, 900 employees. And one of them died in the first quarter mining. Now, they are contesting, management is contesting 3 of the 13 citations. So what that tells me is that this is a dangerous business, and Hallador is probably going to have to pay a claim for the fatality. Probably, or at least help the widow. Do something, right? You can't just brush under the rug, and you've got to fix that stuff. And so we looked at their 10Q, and I'll teach you how to get to the 10Q, because you might not know. I like to go to the Securities and Exchange Commission website, because I make sure I get all the good data on everybody I want. So Hallador. So you go to a new website, type SEC Edgar search. I do this all day. SEC Edgar search. Company search page. You're kidding me, right? You're kidding me, right? Fine. Why would the SEC not let me get to their website? I don't know. That's stupid. But you do that, you get a site and it says, hey, search me. And then you get here and you type in the ticker for Hallador Energy. Get to their 10Q. And you see that, I want to be very focused. Going concern risk is not what I want to talk about. That is not that interesting. It's fine. That's not the point. The point is, these guys have to spend some money. And I want to show you. They don't have a lot of money. They don't have a lot of money. So they're issuing $5 million in senior unsecured convertible notes and another $5 million. So in May, they raised $10 million, largely from insiders, who then immediately turned around and were able to convert to stock below the current stock market price. They also sold another, I think, $9 million in convertible bonds, and they're yielding 8%, which is not bad, I guess, if you're a coal miner, right? 8% on your money is probably pretty cheap, and a lot of that has probably been turned into stock as well. So here, this is what I wanted to bring you to: liquidity. Our projected capex budget for the remainder of 2022 is $18 million, of which $10 million is for maintenance capex. They also have to pay long-term debt of $16.5 million. So that's $34.5 million, and $10 million is for maintenance capex. I hope that the money that they just raised from those insiders, which was 10 plus another 9, about 19, is going to go to pay for the capex, because I just don't even want to think about, and we're talking like near Terre Haute, Indiana, right? That we're sending people underground. These are underground mines, not strip mines where you're out in the sun. You can look around. This is under the ground. This is 10 miles of mines. 10 miles. The equipment is spread over 10 miles. And people go under the ground, and they're counting on the metal beams that hold the mine up, or the equipment, the drills, and the lighting systems and the ventilation systems. They're counting on those to work so that they live. And that's 18 million bucks, of which 10 million is maintenance. I hope that that money is inclusive, but it may not be, of the 13 S&S violations that they had, because that's just going to cost them even more money. So Hallador has now also agreed to acquire a power plant and hire a crew and run it. And the only cost is for disposal. Yeah. Just do me a favor. Just keep everyone alive. Be safe. Spend the money you have to. This is some crazy talk. I love it. They picked up a power plant that the utility was going to shut down. I don't know. Utility was going to shut it down, right? Let's wrap that up. Other thing I want to point out, and maybe this is in my list. It's got to be in my list. It has to be in my list. Oh, there it is. It is in my list. All right. VIX is down. Look at this VIX. You're back in that range, that under 20 range. The VIX is under 20. That means you're betting against a 1% move. You divide by 19.2 to get to the standard deviation move daily. So 19.2, so you're roughly 1%. So the VIX is so happy right now. It basically says that if you want to buy puts, go ahead. You want to buy puts on the S&P 500? They're cheap. They're cheap. The market's really only worried about a 1% a day move. Risk is cheap right now. So you know all the people on Twitter are going to be out there. They're going to be like, oh, the VIX is down, right? It's basically 1% move per day. I want to say that's the 2 standard deviation cost of insurance on the spider down. So it's under 20. VIX is under 20. So that means insurance is cheap, no one's buying it. Now, this could be because all the noobs are working, because it is August 11, and this is when most of the big money people are either in the Hamptons or in Europe, right? The trading desks are manned by college kids at this point. You get a bunch of memers out there. I don't know. It's like noob hour in the markets. So maybe that's why. But I just can't help to think that you have to listen to the market. You have to stop. This is probably the number one lesson for you today, right now. Stop thinking about what's supposed to happen. Stop fantasizing about how life is supposed to be. Stop thinking about, maybe you should have gone to a different college. Maybe I should have been taller. Maybe I should have been better looking. Maybe I should have made more money. Maybe I should have lived somewhere else. Maybe. There's a lot of maybes, and you sound like a crybaby. Maybe the market's too high. Maybe inflation's too high. Maybe the economy, we're in a recession. Maybe stocks are supposed to crash today. But you know what? They're not crashing. Futures are up. Markets are up. Live in what's happening today. What's happening today is the VIX is down under 20. The stock market's going gangbusters. Now, it's still down from last year. There's still room. There's still room to grow, right? Focus on what's happening today, not on what you think should happen. I think that's really important. I promise I'd go back to the game theory here. Oh, wait, there was a few other things I was supposed to tell you. Bonds are up. Bonds are up. Do you understand how crazy that is? Bonds are up. How can bonds be up? Well, the truth is they are. 30-year bonds are trading stronger. Back up to 142. There's no reason to believe they're not going to hit 145, maybe 150, 160. So the long money, 30 years. 10-year money is trading up. 5-year money is trading up. 2-year money, not so much. So the short rates are not really up. But the longer rates, the 5, the 10, the 30, are trading up. And so what that means, what you should take away from that, is that it's cheaper to do things. What's interesting, though, is that corporate bonds are down. I'm going to prove it, and I'm going to show you how. Because you shouldn't have to come to my website. You should, my video. You should be able to do this yourself. So there's a Morningstar FINRA. So you type in FINRA. I have it saved. It's FINRA-markets.morningstar.com. No, I'm not bringing you to Twitter. FINRA-Morningstar. So it should look like this, FINRA. Now, FINRA regulates us as an investment advisory firm. And we like FINRA. We pay them a lot of money, though. It kind of sucks. They're not cheap. And they have a system called TRACE, where bond trades have to be reported in a timely manner to FINRA. And so what you'll notice is that yesterday, actually this is pretty good. Yesterday, bonds went up. Bonds advanced almost 3 to 1. It looks like about 2.9 to 1. But new lows were still 2 to 1. New lows. And high yield was 2 to 1. And investment grade was almost like 2.5 to 1. So at the bottom end of the market, you still see a weakening. But in general, bonds look good today. I wonder if there's a way I could look at some longer term trends. But I'm not sure that there is. But yesterday, bonds were weaker. Today, it looks like, you know what? So corporate bonds did better yesterday. We're going to have to look. There's got to be a way to track that, right? Because corporate bonds in general have been weaker. There's a Wall Street Journal index for that. Hang on. Wall Street Journal has a bond index. Wall Street Journal Market Data Bonds Benchmark. There's a bonds benchmark for the Wall Street Journal that's free. You don't have to be a premium subscriber. Thank goodness, right? Because we're not. And when you look at corporate, you look at yesterday, they're up, just like FINRA said. But year-to-date total return is down. And if you look at the 52-week high on the yields were almost 5% and almost 2% was the 52-week range, and we're at 4.5. So we're close to the high end of the range. So what that says is that U.S. corporate, meaning investment grade corporate, that the interest rates have gone up, that companies have to pay to borrow money. And because long-term interest rates are up a little, not a ton, means that the risk premium, the spread, the risk premium on corporate bonds, corporate fixed income, corporate debt, versus, let's say, government risk-free debt has gone up. The spread has gone up. It's interesting, too. Triple C rated, we used to talk about this all the time because we used to own SMLP. And SMLP was in the triple C rated or junk bond status. And your yields at that time used to be 7, 8%. I remember talking about it, 6.9. That number is familiar to me. I'm out of coffee. I need like a gallon of coffee this morning. So this is really important. The cost to borrow money for risky borrowers has gone from 7% to 13%, 13.1%. So corporate bonds that are junk or triple C rated went from 7% interest rate to 13.1% interest rate. And that compares to a high. They were as high as 15.2%. So I want to share with you what that means. So you're a company, you're Hallador Energy, and you've got to borrow. And let's say you don't have a bunch of insiders that are multimillionaires that are willing to pump money into your company. Let's say you're just a regular company and you just got to borrow. Normally, right? You're paying 13 to 15% plus fees. Do you know Hallador, in order to get a covenant in the first quarter so that they wouldn't basically get shut down by the banks, it cost them $600,000 just to get a covenant change. That's awful. They owe like $100 million, and it cost them $600,000. It cost them 0.6% just to get a covenant change. Do you know what that means? That means a piece of paper, contract. They changed a couple numbers on it, but they didn't change how much they owed. Didn't change the interest rate. Actually, it might have raised the interest rate, but that's a different point. It cost them $600,000. So this is very expensive money right now. So if you have a company that you follow that's not doing so well, let's look at ATI Physical Therapy is a great example of a company that is not doing so well. They're probably going to have to raise money. They're down to $1. They were a $10 stock. And in part because they're going to have to raise money. I bet you they lose money. Let's see if they have any earnings. Gross margin is 15.8%, but I don't think, if they're profitable, they'll break even. But if they owe money, is there a debt to equity? Yeah, debt to equity is 1.22. 200 million in market cap. That means they owe about 250. So 250 million bucks. If they have to pay 10%, that's 25 million. That probably puts them out of business. So that's a big deal. This high yield thing, Wall Street Journal, bond benchmarks, big deal. We haven't looked at that in a while. So while all this kind of gloom and doom is happening, the other thing is interesting. So we downloaded a copy of the law that they're trying to pass. The Inflation is Illegal Act. Come on now. Where is it? You know the one. Inflation is Illegal Act. we're going to outlaw Inflation Act. Should be a PDF. Here it is. Inflation Adjustment Act of 2022. And what does that do to taxes? I think there's a section on taxes. Taxes. Well, there's new taxes imposed. Adjustment for certain taxes. It's not clear. There was something about the alternative minimum tax. Well, there's no increases on certain. I love. Go back. Come on now. I love the sentence. This doesn't really mean anything, but it does, right? No tax increases on certain taxpayers. Nothing in this section is intended to increase taxes on any taxpayer or small business with a taxable income below $400,000. Further, nothing in this section is intended to increase taxes on any taxpayer not in the top 1%. Wow. I thought there was something about corporate taxes, 15%. 15. No. I thought there was something where they're going to do a new tax. Here it is. Here it is. Oh my God. Here it is. I found it. There is a tentative minimum tax of 15% of the adjusted financial statement income for the taxable year. I want you to think about that for a minute. So I know we do our taxes, and so we do our own corporate, personal, and we do our financial statements and all that. The financial statements have a certain rules that you have to use. And the taxes, have a lot of rules that you have to follow. Sometimes those rules aren't the same. You can have income all day long, right? But when it comes to taxes, you got to pay your taxes. Oh, God. So, what this does now is this is going to tie. This is a corporate alternative minimum tax on companies. That'll be 15% of however much money they made, according to their financial statements, which in many cases are works of fiction. Elizabeth Warren talked about this. I thought she was crazy. This, to me, an applicable corporation is any corporation, not an S corporation, a regulated investment company, or a real estate investment trust, which meets the average annual adjusted financial statement income test. This is after 2021. Taxable, adjusted. Its average annual adjusted financial statement income exceeds, that's a big number, it's $1 billion. So they have to have $1 billion of income. Starting in 2022. Or it's 100 million or more. Oh, for 3 taxable year period. For the past 3 years. So it looks like it's $1 billion in the current year. It's 100 million for the past 3 years. It doesn't include a corporation with a change of ownership. Okay. And there's a lot of rules on how to do this. So I just want to say that if you're a stock, let's see if I can do a quick scan. I don't know that I can, but we're going to go to the home page. I really don't think I can do this quickly, but let's try it out. Bubbles. And we're going to look for, let's just look at market cap. So this is any sector. So if you make $1 billion a year, figure your market cap has to be over 10 billion a year. So market cap over 10 billion a year. So this is the number of companies. That's a lot of companies. All those companies are now going to have an alternative minimum tax of 15%. Federal. You know the states are going to pick up on this too, right? But just for now, keep it federal. So all these companies are going to have more tax. I think that's actually quite bearish for stocks. With a valuation of 10 billion or more. That's me. That's me talking there. So, what else? Anything else? Let's talk about game theory again. I've got some other stuff I can do. I can actually share with you some specifics on stocks the model picked and all that. But to be honest, I haven't been getting paid lately by customers. So if you want us to give you stocks, I need you to call me or go to the website and buy a run. I'm not really in the business of giving away picks anymore because no one's paying, right? People are just getting it for free. I get it, right? So, game theory. We had talked before that when you're in fear that there's a recession coming, you want to be the first one to sell. Because if you're the sucker who buys or holds during a recession, you lose, especially if the other guy or gal sold first. So now I think there's another one, which is, what if the market is supposed to go up? Do you buy or do you wait it out? Do you buy or do you wait it out? Or do you sell? Do you sell into a recovery? Well, this is tricky because, and I haven't done the game yet, build the game, but if you think that the stock market's going to go up another 20%, if you feel bullish or optimistic, you kind of have to get in now. Even though your heart and your head is telling you that it's not the right move, the S&P 500 is at 4232. We called a top at 4430. We called the top basically here. So we missed the last little push. So we're going to take, this is a daily chart. We're just going to go back 6 months. We're going to clear the lines. I'm going to draw you a new line, right? So I'm just going to tell you how we saw the market, right? Because this is odd. This is really odd baseball right here. We called the top here. Felt really smart. Went up a little more, fine. Came down, went up, down. We felt really smart at 37. But here's the thing, the market has been in a very, very steep increase, and there's nothing saying that it can't keep going up. It can. It can keep going up. Up, up, up. It doesn't have to, but it could. Now you look at volumes, and volumes actually, they declined as it fell, but now they've been rising into the increases. Now, maybe the last couple days, it's early August, remember, it's summertime. But if this strength persists into September, there's a chance it could just climb right back up again. If you look at the monthly chart of the S&P 500, this thing is used to having bad years. Bad months. This month, this doesn't look that bad, actually, when you look at it. Looks like maybe you should have just bought the dip, moved on. I feel like such a knucklehead telling you this because there's going to be people out there that are going to say, yeah, Jeff said buy the dip. That's not really what I'm saying. What I'm saying is that if you think that the recession is over, what I mean recession is over, and I said this in a tweet to somebody, I don't mean that we're not in a recession right now. I mean that the recession is going to be over in 6 months. That by January 1st, we're growing again. If you believe that by January 1st you're growing again, you want to buy the stocks now. You don't want to wait till January. By January, everyone's bought all the stocks. You're screwed, right? Especially, look at this market. It moves pretty fast. It's gone up. And then you did have the 2020 correction. You did have a 2018 correction. And maybe this is going to be called the 2022 correction. And people are going to talk about, well, when I was in the markets back in 2022, we really suffered. We lost about 20%. But I was smart. I bought the dip, young man, and you should too. I don't know. But it sure looks like it's going up. A lot. And so I think you need to think about it. Where do you want to be in this equation? Do you want to be the safe hand? Or do you want to miss the boat? Now, if you're one of the money managers, you can't miss the boat. Money managers can't miss the boat. They have to be in the boat. You have to be. You have investors' money. It's not a game. You're not paid to sit around on your ass and do nothing. You're paid to deliver market returns. And if the market looks like it's going to go up again, you got to be there. And that is why I think that this market is not done running. Now, there's still value and there's still specific stocks. But this thing ain't done. All right. Let's go to the chat. Anyone want to ask a question? Because I'm about to wrap up. We're going to take a look at our own holdings. See, we lost $38 yesterday. Rome is burning. We have some of the crappiest stocks known to mankind right now. It's awful. So good news is Corbis is up almost 10% this morning. The CFO bought 20,000 shares yesterday. I'm a total bull on Corbis. I don't know why. I need my head examined. But I love Corbis. I think Corbis could be a $3 stock again. I bought more yesterday. I'm so stupid. I just keep buying more. It's hard not to. It's 25 cents a share. It's trading at $33 million. They got more than that in the bank. They got like $72 million in the bank and in investable securities. It's just insane, right? And they owe $20 million. Maybe it's 16 now. So they probably got $50 million in book value. I mean, it's crazy, and they've got some good things that they're working on. I think Corbis goes up. Now, it's always funny when the pre-market is up 10%, because is this the day? Is this the day when Corbis goes to the moon? I don't know. I haven't been on Discord. I haven't been following the, We have a network issue. All right. So maybe I can look at money managers? Yeah, I can. Pre-market, oh, B. Riley's down. Raymond James. But Robinhood's up. That's good for a laugh, right? I bet you crypto's up. Crypto and physical miners. Physical miners, steel companies, they're up. So I gotta tell you, look at that. Clean Spark is up 20% pre-market. Hut 8 mining. So Bitcoin at 24,700. Wow. So Bitcoin's been trading between 20,000 and 30,000. Looks like it's trying to get back to 30,000. That's crazy. That's crazy talk. How about chips and dips? Semiconductors. Strong this morning. Very strong. So market looks like it wants to rise. Economically sensitive stocks. How about specialty retail? By the way, I feel bad for our favorite furniture company. So Hanes Brands is down to 11. That must be something going on, right? Maybe people are too poor to buy underwear, clean underwear, but I like Hanes Brands. I don't know if I like it at $11, but I like it. Boot Barn is up. Dillard's is up. Now, Dillard's is closely held. And so it's possible that the memers are out. This all could be a meme rally, by the way. I looked at our down run. It was all the old meme names. It's so funny. They're back. They're back. I want to see Zach Morris and Laid Back and Atlas Trading and all those guys saying, we're back, we're gonna run up $1 stock to $2, and we're gonna take a 10-cent stock and take it to $1. And this is easy money, right? How about regional banks? Just be careful in your meme stocks. But that's a frothiness right there. So I saw this last night, Cash or Pathward Financial. Down pre-market. It was down after hours. I couldn't find out why, but Cash is probably a company to watch today. It's down and I don't know why. Maybe there's something to do with the mortgages they hold. I don't know. A lot of banks looking sharp today. Now, Pathway is in trouble. They had a bailout, $150 million bailout. Carver is in trouble. But the rest of these guys, JP Morgan's up, Wells Fargo's up, Citigroup, Regions, Comerica, Fifth Third is up, PNC is up, Bank of America's up pre-market. Wow. Banks are up big. That's not normal. So, I'm not sure I bet against this market today. I'm not going to do any bets against the market, which is probably why your VIX is trading at next to nothing. And so we'll close it with this. I'll go back to FinViz, we'll look at the futures, and we'll talk it out for you. Because you're out there in the market, you're trying to make money. I get it. So the VIX is down. It's not quite 20. It looks like it popped up, or maybe it was just a different thing. Maybe that's yesterday's close. But VIX is down, so fear is down, so puts are cheap. But the market is at a committed bear market rally. It's still a bear market, but it's rallying, and it's rallying hard. Energy's up. That's not good for inflation, right? Gasoline wholesale was at $2.80 and is now up to $3.11 week. Look at the euro at 103.7. That's almost 104. Right? We were going to break it. Copper's at 169 or 369, right? That was a 350 was a support level, key support level it broke out of. Silver's over 20. If you look at bonds, 142 is a pretty healthy amount for a bond, 30-year bond price. 120 is pretty healthy. 112, and so bonds are up, and bonds are strong, and so when interest rates are low and the cost of insurance is low and stocks are going up, and the dollar's weak, this is very bullish. I should probably be wearing a green shirt today. And so, good luck in the markets. This is how we see it. I'm just telling you straight. And if you get a chance, check out Corbis, because we have a lot of shares in Corbis. It's not a very large position because the stock is so small. It's so low. It's down to like 25 cents a share. But it's interesting. So, and then the rest of the stuff we won't even talk about. And just be careful if you're a coal miner. If you actually go underground, make sure your company is spending its money to fix the equipment you need. One fatality is one fatality too many for Hallador Energy. Let's not have it be more, because they didn't spend the $10 million they needed on maintenance and another $8 million in capital improvements for their 10 miles of mines that they've got to manage. So, thank you for watching. You take care now. Bye-bye.